Morning, everybody. It's the 5th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate.
How you doing?
All right, not bad.
Good. Good to hear. Right, let's get stuck in then. We've got to wrap this up by 9:15. So straight into the headlines. Most stocks in Asia dropped overnight, while European futures are slightly higher. Technology shares are declining as investors fret about increased interest rates. Treasuries were steady after yields rose amid increasing conviction that the Federal Reserve will raise rates at least 3 times, beginning in May to counter price pressures. So that's obviously having quite an impact, most notably actually in the Nasdaq index, as we'll come on to soon. In terms of what's going on in the COVID situation from a UK perspective, Boris Johnson has said the UK can weather a record wave of COVID-19 sweeping the country without tighter restrictions, even as he warned the National Health Service is under growing strain. The country's booster vaccination programme and the rules in place since before Christmas appear sufficient for now, according to the Prime Minister. We also had overnight news that North Korea had launched its first ballistic missile in about 2 months, days after leader Kim Jong-un indicated that returning to stalled nuclear talks with the US was a low priority thing for him this year. The apparent missile flew about 500 kilometers on a normal trajectory and landed in waters outside of Japan's exclusive economic zone, according to Tokyo officials. We've also had news overnight from yesterday that Goldman Sachs reckons Bitcoin could hit 100,000 if investors continue to treat it like gold. If the cryptocurrency share of store value market were hypothetically to rise over 50% in the next 5 years, it means that the price could move onto that level, but did say that its true value remains up for debate.
Oh, thanks, Goldman Sachs, for a
Yeah,
load of
cheers.
rubbish.
That was a bit fluffy, wasn't it? Could do that, could do this.
Yeah,
Um, so let's try and get into a bit more conviction in our analysis, Steve, and look at some charts. Where do you want to start things today?
I'll start with commodities. Obviously, on our gun to head challenge yesterday, we went short of gold, both of us, and both got stopped out, so that's not good. And so I'm going to look at the charts and trying to break it down. I did a video on oil this morning, if anyone's interested, on WTI, Brent, and natural gas, and just looking at the different time frames on it here, which I'll run through now. Now, one of the formations that has potential, so it's still a long way off. This formation I won't have any conviction on it until we break the neckline. Now, I'll show you where the neckline is by drawing it in. So this is the neckline. So it has to break down below, currently this week, below $62.82. Now you may say, well, why are you talking about it now? Because we're 76.80 trading or 76.50 trading. So a long way off, but this is maybe more for a longer term opportunity rather than a short intraday one. So, but the interesting thing is that we're seeing this impulsive move higher, which we normally see in most markets. Based on supply and demand, that's what normally happens. Then we normally get a correction. This correction normally happens in 3 legs, so 1, 2, 3. And what I do like the look of is this rally from the low, which it's formed a higher low. So the low is higher than here, so a little bit more demand, picks up, but it's now starting to top out a little bit, and it's topping out around the previous swing high of the 3rd leg, and also 61.8% Fibonacci retracement level, which is a really normal correction in markets. So a couple of reasons to look at this. This is obviously the weekly chart, so there's a little bit more detail on the daily chart. Looking at that, and we're seeing momentum stalling ever so slightly. So, and we're seeing that this high prices seem to be struggling to get above this $77.50, topping out yesterday, retracing, and it's a little bit on the back foot this morning. So a little bit under pressure. Just watch this closely. I think if we do get a break of $74, then I'm more inclined to sort of go with this. Maybe then you could sort of get short with a tight stop above, you know, using normal good risk reward approach. Similar sort of formation really in natural gas. You see that the shoulder, the head, another shoulder possibly forming here, and we had this area where we broke down below on natural gas, and it's still under a little bit of pressure. We've got a level at 350 and a level at $4.05. I think a break of either one will be significant and which should lead to a sustained move higher. You can see the moving average crossover divergence has crossed over, so that's potentially a bullish sign, but it's below the actual MACD histogram, so not quite as convincing as if we got a crossover above it. So yeah, that's really trading this range, waiting for a break on natural gas. Gold, interesting, because we looked at this yesterday, Joe. We were looking at this bearish flag, which didn't play out, and we had a bit of a move. Let me show you the bearish flag on here. That's on the hourly chart. So we saw the bearish flag, looking for a break here, which we did get a break, but it didn't manage to break below the bottom of the pole, which is 1798. Held here, held nicely, and then we saw this really fast correction higher, broke above 1808, and also got above 1813 to 1815, which is has been a previous pivotal level. Looking quite strong this morning as well as we go into it. So I think the next level to really consider that could come under pressure quite quickly is this 1834 level. Again, let's look at a slightly longer term chart so we can see why I like it as a level. See these red arrows here. This is where it stalled before, stalled again, potentially looking for another retest of it, because I think if we get break of 1834, it opens up the upside. A lot of people are talking about gold safe haven, and really it's quite based on the dollar. So if dollar goes lower, gold price will naturally move higher. So bear that in mind. So what am I saying on gold? I'm now changed my tune on gold. Think we could get a projection higher from here. We're trading at 1817 now. Could be my gun to the head trade, because you can have quite a tight stop just below the 1810 level. I don't want to give anything away because Joe's watching. Bitcoin, thanks for that, Goldman Sachs. Could go up, could go down. Yeah, really helpful. So they'll get it right one day, and they'll obviously publicize that headline and not say the other headline. So anyway, we are finding support at 45,500 in Bitcoin, and we're looking to retest again. You can see these lower highs posted. So looking for a real retest. I think if we do get a break of this level, it's the 78.6% fib. So it'll be quite significant. A break of there, and I think it opens up a move down to 40,000. For me, Bitcoin is on a trajectory lower. It could go up, could go down, just like Goldman Sachs. But I believe it's on a trajectory lower. I think there's better cryptocurrencies out there, more greener ones, which we love green, don't we? Because it's has less impact on the planet, apparently. Ethereum. This is quite a popular one because it's used in NFTs to pay gas fees, which is another word for commission. I'm sure these cryptocurrencies were built to sort of like cut down on costs, but funny enough, all these costs are starting to appear. But again, we can look at Ethereum, and we are in a little bit of a corrective channel here. Let me just draw this channel in here. So looks quite constructive, but the fact that we've made a lower low back here puts this a bit under pressure, and again it brings back this flag formation that we've talked about. So yeah, things to watch out for. If we really want to look at it from a momentum perspective, we can see negative momentum is stalling as this price moves lower, so that's bullish divergence. But it is a little bit of a flip of a coin at the moment. I think it'll get dragged one way or the other by Bitcoin until it sort of like forms its own real value in the market, which I think it's trying to do. There are other coins out there that I'd like to look at. I think one's called Solario or something like that, Joe. Was it Solana? There you go. Cameron beat you to it, Joe.
I wouldn't have known what it
Solana.
was anyway. Sounded like an
Well,
ice cream.
yeah, it could well be. I wouldn't be surprised. Well, this is one of the greenest ones, and transactionally, it's pretty quick as well. You can see that this really sort of came to the market and really sort of found interest back in August 2021. So only 4 months ago, and it had this exponential move higher. Again, you're seeing the same sort of pattern. You're seeing. Currently, we're getting a little bit of a run to the downside in cryptocurrencies. Not a great channel there, so I'll leave that for the minute. but support found here at 148, trading around about 169. Again, drilling down into this. Yeah, it looks a little bit under pressure as well. Really needs to recapture ground a bit above 180 to open up a further attack on the upside. But support coming in at 167. Break of that should lead to a move to 148. Cardano, we've looked at this on a long-term perspective. This is a very popular one as well. We've got this long-term upward trending support line, so it's nice to sort of like, you could easily sort of like, good risk reward trade would be to set longs in front of this supportive trend line with a really tight stop, and really look for a reaction higher. A break of this trend line, however, could open up the downside. So lots of ifs and buts and maybes and wheres and whens in the cryptocurrency world, as per usual. FTSE projecting higher. We got up to 75.23 this week. Let's see when we did it. Did it yesterday by the looks of things. Yeah, yesterday came back, traded that back down to 74.65, found support, and looking quite positive on the FTSE side of things. The DAX also pushing towards the all-time highs. Let's get a label on that all-time high, 16,300. 16,183 trading. Doesn't really feel like slowing down these indices. Don't really know what sort of event is going to stop it. In raising interest rates may seem like a good thing, but it will definitely impact on the spending power if we do get too many interest rate rises. So maybe a good thing for a while. I believe that if we start raising interest rates, we could see these markets turn around quite and have quite a nasty spill to the downside. Looks like a new all-time high also yesterday in the Dow Jones, 36,932, quite close to 37,000. 40,000 is a big round number, seems within easy reach now as well. Nasdaq, not so, didn't perform as well yesterday. Obviously, you've got a lot of the tech stocks in Nasdaq that had a bearish outside candle, so that looks a little bit on the back foot. Really looking now for a break of 16,150 to put further pressure on this, potentially looking to buy the other indices, buying either S&Ps or Dow. Selling Nasdaq could be a little bit of a play there. S&P all-time high yesterday. What did that get up to? 4,817, 4,817, and formed a doji candle. A little bit of indecision. Look at the momentum stalling. Could be a little bit of a roll over here. You never know. Not going to back it either way at the moment. Let's see how that plays out and get some decent candles, decent rejection candles before we think about selling that on a short-term basis, not on a long-term basis yet. We'll have our day one day. Is this a high in Aussie 200? It did. It took out August high, 7,656.5. Really nice positive candle on the Aussie 200 yesterday. China 50. I'm still convinced by a break of 14,500 could really cause a slide in the global indices. I've been talking about it for a long while now. We've seen a bit of a rejection from the December the 13th high, moving lower under a bit of pressure, but maybe not under as much pressure as the Hang Seng, looking pretty scary, really. The Hang Seng, a break of support coming in now at 22,660, and I think that could lead to a little bit of a targeted move down to 21,100, which is the previous low from March 2020, which was the pandemic low. So one to watch there, the Hang Seng, under pressure, obviously, because of everything going on in Hong Kong at the moment. No one really knows. Really, I mean, there's a live situation, obviously, under a lot of pressure. Nikkei doesn't seem to be too bothered by it, pushing to new highs on the year, obviously, and yeah, I don't know. I suppose it's stalled today. Still potential for a slight upside, but maybe a little bit of a Tuesday turnaround in the indices. There's looking like a little potential there, Joe. Not sure. I don't know. Maybe the foreign exchange, the FX, can shed a bit of light on where we go next.
I don't think so, if I'm honest, mate. It just all feels a bit flat, to be totally honest. This is the dollar index, and yesterday, just a bit of indecision. Yes, there's a bit of red on the chart today, but ultimately, we're still in this bullish channel, and I still think higher prices will be seen. But we are seemingly trading sideways on the dollar index at the moment. And that doesn't really show any immediate signs of changing. If you look at, where we're trading at the minute between this resistance up here and this support here, we're kind of bang in the middle of that. So really difficult to call it either way, to be totally honest, when it comes
You
to
sound
dollar
like a Goldman
index.
Sachs analyst.
Yeah, I know. I feel like one. I just, it is a bit of could go this way, could go that. I don't really have any strong view either way, to be totally honest. And sadly, it goes like that from time
Yeah,
to time. But I mean, the underlying bias for me remains bullish on dollar index. So, I do have conviction in that sense.
nice.
Um, Euro US dollar, this is sort of clearly within a downtrend, so bias remains bearish, but in the short term we are consolidating, maybe forming some sort of wedge. If it breaks up, then we may argue that's an ending wedge formation and we could see a correction higher, particularly if it breaks out above this downtrend line as well. If it breaks to the downside, then we're expecting a continuation lower down to our targets on the downside in this kind of region here between 110.58 to 1.1000. So either way, again there, indecision yesterday, not really much to go on, a bit of strength today, opposite to what we're seeing on the dollar index. So nothing really to gain from that. Looking at euro sterling, that made new lows yesterday, 22-month lows. More strength in sterling, obviously further weakness in euro. That's showing no signs of slowing. We do have some interesting support down at 82.75. We have to go all the way back here to 2019 for when that level was relevant. So it looks to me as though we are going to see a test of that level at some point. If we get a break of that level, then we have to go back to, well, really, this is back in 2016. Last
Nice.
time we saw those lows. So massive, arguably top pattern that's being formed there in euro sterling. Let's have a look at that on the weekly just to see how it looks. As you can see, it's all sort of rounding off here and has been for a good few years. So a break below there would be really quite significant, I think, and we could start seeing even further downside, persist on the more longer term, on a more longer term basis there.
Yeah.
Let's take a look. Let's get rid of those offending me, those terrible drawings. What else have we got? Sterling versus US dollar. That continues to move higher. Decent day yesterday, engulfing pretty much all of the losses that we saw on the 3rd of Jan. Pushing a bit higher today. Ultimately, we are in a downtrend in the sort of short to medium term, so it'll be interesting to see how it reacts around this kind of level and whether or not the sellers do actually step back in and we see further weakness there. But looks to be a corrective move at the moment. As we touched upon yesterday, we saw a big breakout from US dollar versus the Japanese yen, making new highs above this 115.52 level. So bit of a dip today. Maybe going to sort of see a retest of that new support at 115.52 before a continuation higher. So that looks pretty good for the time being. And again, further supports the fact that we are bullish on the US dollar. Aussie versus US dollar, that's again trading in some sort of consolidation pattern. Mixed price action. We saw a big sell off on the 3rd. We recovered some of that yesterday. Indecision so far today. A break to the downside, and we're expecting a continuation lower in line with the dominant trend. A break to the upside, and we may see this correction persist a little longer. But I think what we will see is probably just a correction towards the downtrend line that we have on Aussie US dollar. So watching that for now as well. That's pretty much it for me on the currencies. Few holding patterns it seems at the minute, waiting for either these corrections are going to continue, or we're going to see a break in line with the dominant trends and a continuation of those.
Nice. Thanks, Joe.
Okay, gun to the head trade from yesterday. As Steve mentioned, we both got stopped out on gold, which wasn't too pleasant. But we get another crack today. Anything you fancy, Steve?
Yeah, if it's fancy buying gold, mate.
Okay.
Yeah, flipped completely. Chart I'm showing you just is this dollar index, and no, we're long term we're bullish on dollar. So looking at this obviously short-term consolidation phase that we're actually thinking about, and I just wanted to highlight this double potential for a double top formation. Double tops quite powerful formations. We can see that support is currently at 95.52. A break of there opens up a potential for a move to the downside, and that can be easily measured. Oh, not easily measured, obviously. So the measured move target for that, if we do get a break, would be, obviously we need a break. It has to break 95.52. Don't do anything until then. 94.18. Back down to this consolidation area. So that's just something to be aware of, and we are bullish of it overall. We can see that bearish momentum is stalling currently. So yeah, bit of a high risk trade. Just be aware of that one. Yeah, but I'll pop to gold. Yeah, got smacked on this yesterday, but picked myself up, dusted myself down, and going to look again. So this is the bearish flag, which didn't play out. Now we've got this double bottom formation, which has played out. Measured move target would be around about this area. But again, we're sort of like looking like this is quite constructive. So I'm potentially thinking we could have a revisit up to this 1834 level. So because I've got a gun to my head, I've got to take action right now, and I'm going to put a stop in around about 666, sign of the devil, Joe. That's a bit worrying. I'd love to work out what 666 is times 3, but I'm not going to make it to there. I don't think, unfortunately. So I'm looking really to revisit this 1834 level. I'll put my target around about here, 18. What have I got? 1831.28. Let's go a little bit better than that. 1833, 2.45 to 1 on this, Joe. Buying here, stop at 1810, and a target in 1833.
Cool. Best of luck. I'm struggled today, if I'm honest, to try and find something that I liked. I did eventually find something on the currency side of things, and that was on sterling New Zealand dollar. So this is the daily chart. I mean, you could argue that this is forming some sort of bottom pattern, maybe an inverse head and shoulders, but it hasn't done it yet. So it's only a potential pattern at this stage. And this is what I'm talking about. So that would be the left shoulder, neckline, head, right shoulder, there. So it's getting close anyway. The neckline's sort of in there. But basically, the reason I'm liking this one today, this swing move here, we've retraced up to the 88.6% fib level, a lesser used fib level, but it's kind of the last chance that these fib levels get to work, in my opinion. If it fails here, then we can argue that the fib levels have done a reasonable job. If it breaks out from here, then we're going to complete this inverse head and shoulders bottom pattern, and we can start looking for higher prices. So this is kind of the zone where it's either, if it's going to work, it needs to work right now on the short side, and if it's not going to work, then so be it. We've risk managed the trade and we move on. So I want to sell it on that basis on the daily chart. What I noticed on the intraday charts was this candle here, which was posted between 8 and 9 a.m. today, a really strong reversal. We've tried to get up to those highs, but had a real rejection there. So based on that candle and what I've seen on the daily, we can have a little crack at a short. So it's currently trading at 198.90. I'm going to sell it there. Stop loss at 199.36. I'm just going above the high of that candle that we posted over the last hour. The candle from the 4th of January, the high is slightly higher. So if you wanted that additional bit of protection, maybe go above that. But I want to maximize my risk reward on this. So I'm going to look for a pullback into this kind of zone here where there's a lot of congestion and sideways price action to target, which is at 197.07, looking for 3.9R on that one today.
Nice one.
That's my trade of the day.
Yeah. Okay, I'll let you have
Um,
that one.
yeah, thanks, mate. Okay, so just yeah, that would be quite nice.
That'll do,
Okay,
donkey.
that will do. Right, numbers today. We've got US ADP employment report, which is due out at 1:15 UK time. After last month's strong 534,000 number, the figure is expected to grow at 495,000. Typically, this is a precursor to the non-farm payroll number, which is due out on Friday. At 3:30, we have the US EIA crude inventories report. Stockpiles fell by 3.5 million barrels in the previous week. And then at 7 p.m., we have the big one, the FOMC minutes covering December's meeting, and we'll be looking at the pace, the increased pace of tapering, and potentially some chat with regards to interest rate hikes during 2022. So, could be an interesting day for markets. Could be some volatility in there. So do be careful if you are trading markets today. That is it from us. Unless, Steve, you've got anything else to add?
No, nothing to add, mate. Have a good
Perfect.
day.
Well, have a good day, everybody, and see you tomorrow.
Cheers.
Goodbye.